Today, we're going to take a look at what exactly lies behind the term ETF. ETFs are becoming increasingly popular, so you've probably heard about them a few times. What they are in detail and what advantages and disadvantages they bring with them, we'll be covering in today's video. The abbreviation stands for Exchange Traded Funds. ETFs can therefore be categorized as funds. Funds pool individual securities, such as stocks. These individual stocks have a certain allocation within the fund, which in financial terminology is called weighting. By pooling different stocks into one fund, individual risk is, of course, reduced. If one stock within the fund drops significantly, the remaining stocks can, ideally, offset this negative development. This is referred to in financial terms as the diversification effect. In general, funds can be divided into two categories, active funds and passive funds, with ETFs belonging to the latter. Active funds are managed by so-called fund managers. Their job is to analyze the various stocks in detail to identify the ones that fit the fund's strategy. This work is usually very labor-intensive and requires a high level of expertise, so active funds typically incur significantly higher costs compared to passive funds, which we'll discuss shortly. The tedious analysis and selection of individual stocks isn't required with passive funds like ETFs. With ETFs, the selection of individual securities, such as stocks, is typically based on following a specific index. Ideally, the ETF replicates the corresponding index one-to-one, meaning that no fund manager needs to be paid. If a stock leaves the index, it is no longer considered within the ETF. Likewise, if a stock joins the index, it automatically becomes part of the ETF. Classic examples of popular indices include the Dow Jones Index, which consists of 30 large publicly traded U.S. companies, or the MSCI World Index, which is made up of 1,600 companies from industrialized nations. As mentioned earlier, ETFs do not require a fund manager, as the ETF merely reflects the underlying index. This is why ETFs are significantly cheaper than active funds. The costs are measured by the management fees, also known as the total expense ratio, TR. For ETFs, this typically ranges from 0.1 to 0.5% per year, whereas active funds can easily incur 2% in annual costs. Let's now discuss the main advantages and disadvantages of ETFs. One key advantage is that ETFs are very cost-effective. This becomes especially noticeable over a long investment horizon. Another advantage is the flexibility of ETFs. This is particularly true when ETFs are regularly purchased through a savings plan. In such cases, the savings plan can generally be adjusted at will, meaning the savings rate can be increased or decreased. Additionally, most ETFs are very liquid, meaning they can be bought or sold directly on the stock exchange without having to wait long for a buyer or seller. Finally, ETFs also offer high diversification, significantly reducing risk. By simply purchasing one MSCI World ETF, you gain exposure to 1,600 different stocks. With just a few ETFs, you can benefit from the development of the entire global economy. Now let's move on to the disadvantages of ETFs. ETFs do incur ongoing costs. Although these costs are much lower than those of active funds, they still exist compared to individual stocks, which don't incur such costs. Additionally, tracking an index inevitably means that undesirable stocks are also purchased. Although consistently underperforming stocks usually leave the index, if you have an aversion to a particular stock in the index, you'll still have to buy it. Lastly, ETFs are sometimes criticized for limiting market efficiency, which refers to the market's ability to quickly process information about stocks and determine their fair value. If stocks within the ETF must be purchased as part of a savings plan simply because they are included in the index, this automatically drives up their price, even if no new information justifies such a positive development. As with all other investment products, ETFs come with both advantages and disadvantages, and it's important to be aware of them. The rule of thoroughly informing yourself about an investment product before purchasing it should always be followed. We hope this video has helped you understand the topic of ETFs. See you next time and have a good one.